much coverage do I need on my home? How do I know if I have too much or too little? What is the importance of the replacement cost value of my property? Answering these questions is vitally important for insurance agents to provide great coverage for their clients. We want to make sure that replacement cost is adequate so a client does not get hit with a coinsurance penalty at the time of loss. What is coinsurance? Coinsurance is a penalty that an insurance company places on the insured for underinsuring the value of their home. Typically, most insurance companies need you to carry at least 80% of the replacement cost of the home at the time of loss. Now, the penalty is based on company policy language, which is a percentage of what the home should have been valued at the time of loss and the amount for which it was underinsured. Let me give you an example of one of my clients back when I ran an agency. When I did a quote for this individual, their home coverage was listed at $150,000. Now, when I did a valuation on their home, the replacement cost that we calculated was $460,000. That means that this client for the last 5 years was underinsured. Now, lucky for them, nothing happened to the home. If something would have happened and they had damages due to a covered loss, they would have been hit with a coinsurance penalty. With the coinsurance, it says that a client needs to maintain at least 80% of the replacement cost at the time of loss. So in this example, they needed to have $368,000 of coverage on their home in order for a claim to be paid out fully. This is a formula you can use to calculate how much you would be paid out on a claim if you were hit with a coinsurance penalty. The amount of insurance they needed to have at the time of loss at 80% was $368,000. They only had $150,000 worth of coverage. What we're going to do here is we're going to divide $150,000 by that $368,000, giving us 0.407. Uh-oh, a disaster happened. There was a fire in the kitchen, and there was a $100,000 loss. This is your damages. This is the amount it was insured for. This is the amount it should have been insured for. What am I going to be paid out on? Now, for a lot of individuals who are outside the insurance world, you may think, I had $100,000 in damages. I have $150,000 in coverage. The insurance company should pay out the full $100,000. But that's not how it works. The insurance company is going to hit you with that penalty because you underinsured the value of your home below that 80% threshold. And so that calculation is going to be that 0.407 times the loss, which means the insurance company is only going to pay out $40,760.87 on this $100,000 loss. The coinsurance penalty in this example is almost $60,000. That's a big penalty for not having the proper value of your home. As an insurance agent, it is vitally important to review the home values of your clients every single year, because the fluctuations of the replacement cost of a home can vary drastically from one year to another. You don't want to go several years like this client did without reviewing that replacement cost on that home. If you want more tips and tricks like these to help you spot gaps in your client's coverage, comment the word insurance, and we will connect for a top performance call to show you ways we can better help you serve your clients by providing the best policies for them.